Bullish trading activity around EA Breweries yesterday dominated market activity, accounting for over 65% of market turnover. Now, the stock trading at around 214 shillings. We know the company recently raised prices by around 10% as a result of rising raw material costs and utility costs. Is this a stock that you'd be buying into given the strong run that we've seen?
I think we'll probably be looking at profit taking at around these levels. If you look at the challenges the brewer has had, and I think probably with a probable reduction in volumes because of the alcoholic controls bill, probably that's why we've seen them having to raise prices in order to compensate for the reduction in volumes. But that said, we are yet to see to what extent the increase in prices is actually going to impact the bottom line.
Moving on to housing finance, it reported its Q1 results yesterday. Now, profit before tax rather, for the first 3 months of the year, growing by a strong 65%. The net profit after tax also posting around the same margin of growth. What are your impressions of these results?
I think very solid earnings. I mean, if you look at housing finance from where it's come from, it's really consistently improved, since it's raised its capital some years back. And, we are seeing its price earnings PE ratio actually reducing quite significantly every year. And consistently, we're actually quite bullish on the stock. Obviously, housing is a key driver of its earnings. And obviously, so now, if we look at its earnings going forward, we think it's still going to remain quite solid.
At 26.25, is it a buy for you?
Yeah, certainly. If you look at the earnings, the interest income grew quite strongly. The non-interest income also grew strongly because basically you have the fees and commissions on the loans that they gave out. And then if you look at the mortgage sector in general, it's been facing challenges in some sectors. But if you look at the segments where housing finance is focusing, I think there's still quite a bit of room left.
Now, other stocks where we're forecasting increased earnings, full-year earnings, are tea companies. If you look at tea exports to Pakistan, which is one of the major tea markets for Kenya, they rose 30.7% in the first quarter. Now, this represents about a fifth of total tea exports for that quarter. Given the prospect of increased earnings, especially to growing markets like Pakistan, would you be buying into tea stocks, especially the smaller stocks like Williamson Tea and Captura? Are these stocks that, even though they're very illiquid, represent some upside potential?
Yeah, you have Williamson Tea and Captura, which are actually about to announce results, the full year results for the period ending March. So those are they're actually going to benefit significantly, mainly because of the price increase. I think if you look at the sector increase in exports for the first quarter, we also had a combination of the Egypt issue. But more or less, I think the performance of the sector has been quite buoyant. For us, we look at Sasini as the more liquid entry point. So if we're looking at that, you could look at Williamson Tea, Captura, Sasini, and Kakuzi is also another preferred entry.
And Sasini has actually fallen for the month. It's sitting at around 9.55. So it perhaps represents a buying opportunity at the moment, given the increased earnings prospects.
Yeah, certainly.
Looking at British American Tobacco, it says it's set its sights on the Sudan market to grow its market exports. Is this a good prospect for the company? It's currently exporting to around 16 African countries. There are some concerns about illicit trade in the region and obviously capacity constraints.
I think as a company, BAT is quite solid. In fact, this year, what they've been trying to do is probably also trying to gain share because the market for tobacco is generally flat, maybe declining slightly. So they've just generally been trying to gain share from the illicit trade and also from maybe competitors. But we had a tax implemented last year, which basically they effectively had to lower their prices to reduce the impact of tax on their product. And we think that could affect their first half earnings. But that said, last year they also commenced export of cat rag to Egypt, and that has been doing quite well. But we'll wait to see first half earnings, how they would have held up well in view of the tax that was implemented last year.
Eric, very quickly, let's look at the broader issues facing Kenya at the moment. You've got a crippling fuel shortage. Many businesses have been forced to grind to a halt. It's affected transport companies, manufacturing companies. How bad is the situation on the ground?
I think if it persists for any longer, it's going to be a big concern. At the moment, we've been having fuel coming through, especially diesel. But you know, the super was one which has been in short supply. But I think we've been seeing supply coming in. Obviously, challenges when you have people trying to stockpile the commodity. But in general, I think it's going to be resolved soon. I think the bigger issue is with the Kenya pipeline and maybe also with the oil marketers. Kenya Pipeline has faced lots of criticism in the past, especially with regards to allocation of storage capacity, especially to smaller players who don't have downstream stations. So, but at the moment, it's been very debatable who's really causing the issue at the moment.